Hi class, and welcome to this video for VCE Year 12 Accounting, which is going to cover how to record donations of inventory. And remember, in Year 12 Accounting, we're thinking about how we record a transaction in the world of double entry accounting, which involves debits, credits, general journals, and general ledgers. So what do we mean by, and there is a keyword, donations of inventory? And that's the keyword that you're always looking for in a transaction to determine that it is this type of transaction. And why do we suddenly have this word advertising? We know that businesses often donate inventory, and this could be to support local schools or charities. And one of the ways that they do try and support these other entities is that they donate goods. And you might start to see examples of donations to raffles and fetes. But the key word here that you're always looking for is if a business has done a donation of what their inventory is. Now, if we do this, we're not going to record it as drawings. Now remember, if inventory is withdrawn for personal use, we're going to go say our drawings have gone up and inventory goes down, that being our credit and debit. Now we don't consider it to be drawings here because we know that while businesses do this out of the goodness of their heart sometimes, they will receive good publicity. So when they do this, so when the cost of the inventory is donated, we're going to start to consider this an advertising expense because they're going to get publicity from it and they might even get extra sales from it. Now, remembering our definition of an expense is anything that is going to reduce an asset and reduce our owner's equity, which in this case it will, but we're going to consider it advertising instead of drawings. Importantly, because there's no sale here, there will be no GST attached. And remember, if there's GST involved in a transaction, the transaction will always tell you. So you don't put GST in unless it says. So when you're recording this, we are still going to have our inventory going down. So our asset is going to be our inventory. And when an asset goes down, it is a credit. But we're now, instead of going to be recording drawings, we are going to record an expense increasing, which is a debit. So this is our template for when we do a recording. And now let's go through an example. And one thing to remember before we do this, and we'll highlight it in our example, donations are always recorded at cost price. We know our inventory is leaving our business and our inventory is recorded at cost price due to verifiability implications. So we record what's leaving our business at cost price. So here is our transaction, and let's have a look at a particular example. In this case, my example is on April 7, the owner donated, and you've seen the keyword, so you instantly go advertising, some inventory to the local primary school and receive free advertising in the school newsletter. So this is telling me it's advertising. Not every transaction will, but the keyword is donation. And we have a memo. The cost price of the donated goods was $400 and the selling price was $700. We know that the rule is we record what is leaving at $400. Now, once we've done that, the transaction is pretty simple. I record the date, which is April 7. And then I record my debit and credit, and I've realized that advertising is my debit of $400. I've seen the $400 because it's cost price, and I'm following my template. And then my credit is going to be my asset going down, and my asset going down is inventory. Now, don't fall into the trap of putting anything else in the details section. We only ever list the general ledger, so you're not going to tell me what has been donated, just that we recognize it is inventory. We then importantly need to do a narration. Anything here is generally fine so long as you include the source document, the required thing to do to get your mark there. And I've said owner donated $400 worth of inventory to the local school for the annual fete. Now, I probably didn't need to do the $400 because it is implied in my debit and credit. And I might say what type of inventory it was if I know, but I don't know in this transaction. I then have my perfect instructions in my general journal. I have correctly identified my debits and credits, and I now need to put it into my general ledgers. Now here is my general ledgers, and we're going to follow this through. I'm going to find my advertising ledger, and my instructions say to do a debit, and debits equal left, and credits equal right. So I'm going to pick the $400 up into my advertising ledger and record it in my debit side. Why is my cross-reference inventory? Because we know the cross-reference is the other side of the transaction, and this is my credit. Similarly, I am then going to find my inventory ledger and record it a credit, so on the right-hand side, and advertising is my cross-reference because that is my debit. I've correctly linked the ledgers and recorded that, and my cross-reference is the ledger names. I've ticked off everything I needed to do. And that is essentially how you record donations of inventory. For those that want to work through a quick question with me, here is the Macmillan textbook, Chapter 6, Exercise 6. And here we have inventory used for advertising, and I'm Lydia Lawrence. I'm the owner of Northside Music and Beats, and she has received a request from Northcote Primary School to donate, and I've identified the keyword, some goods for the annual raffle. Lydia decides that it may be beneficial for her business as the principal has guaranteed advertising. Now, I don't care about that. We could have stopped there. The keyword is donation. I know inventory is leaving my business and it's going to be for advertising. We now have the information on 31st of March 2023. She's taken some inventory from her shelves, which was selling for $1,200. She notes the details on memo 162, and there was a markup of 100%. That means my selling price equals $1,200, but more importantly for me, my cost price equaled 100. Because we know if we see 100% as a markup, it's a really simple one. We halve it if we have our selling price to get our cost price. We double our cost price to get our selling price. We need to prepare the general journal and then think about the twofold effect on my accounting equation. So in terms of the general journal, I've recognized that it is an advertising expense, and I know that $600 of inventory is leaving my business. So on the 31st of March, advertising is my debit of $600, advertising being an expense that is increasing, and we know that that's a debit. And inventory is an asset going down because inventory is leaving our business, and that is $600. It doesn't say that we don't do a narration, so we assume that we will. Inventory donated by owner to Northcote Primary for raffle is perfectly acceptable, and the important bit here is to record the memo. Then we have to go, what is the twofold effect of this equation? What is my impact to my assets, my liabilities, and owner's equity? And we know that our assets have gone down by $600, in this case, inventory, and our owner's equity has gone down by $600 because as expenses rise, this will decrease our profit, decreasing our owner's equity at the end. Now, I hope that you've followed that example and the concept of donations of inventory for the purposes of advertising, because that is how we record it in Year 12. VCE Accounting. I hope that you followed and found this video useful and the example was useful, and I hope this helps you build your understanding of common transactions we're going to see in Year 12 accounting.